everyone, today I'm here to talk about ETFs versus Robo versus investment linked plans. Okay, so this is not financial advice, this is just like my personal opinion on the comparisons between the three investment vehicles. Okay, yep, so let's get on to it. Okay, the first one I want to talk about is ETFs. So what exactly is an ETF? ETF is an exchange-traded fund. So what's an exchange-traded fund? It's a security that tracks an index, sector, commodity, or asset. So this can be purchased or sold on the stock exchange the same way as a regular stock, but then the risk is like more diversified lah. So it's diversified in the sense that it's a whole basket of like stocks or whatever thing that is tracking lah. Yeah, but if like you buy a regular stock, then if the company goes bust, then definitely the stock will go to zero lah. Yep. Okay, well-known example is VOO. Later I'll be sharing more about this VOO and then let you see what are the potential returns. Okay, so it tracks the S&P 500 index. So what is S&P? Standard & Poor's lah. It's mainly the US market. Okay, for the purpose of all these sharing, right, I'll be mainly focusing on the US market because I am more well-versed with the US market compared to the other markets. Okay, so there's also like Singapore ETFs, but I'm not aware of it and I don't really keep track of it. Okay, so ETFs can contain many types of investments. So there can be stocks, commodities, bonds, or mixture of investment types. Okay, so it's different from a mutual fund. So they are all called funds lah, but exchange traded fund is linked to an index, like a basket of things that you track. Mutual funds, right, are what, like for example, mutual fund of tech, right? We focus mainly on tech companies, but it's like managed by a fund manager. So the fund manager will decide what goes into the fund, and then the value will fluctuate accordingly. Yeah. So it's like actively managed, but exchange traded fund is not actively managed. Yeah. As such, ETFs tend to be more cost effective and more liquid compared to mutual funds. Okay, so type of ETF available: bonds, stocks, industry, commodity, currency. Okay, so how do you can invest in an ETF? You can invest through a brokerage. So what are brokerage? So you basically sign up for the app lah, either IBKR, Tiger, or Momo, right? So you can trade these exchange traded funds there. Okay, so how should you be trading? I mean, not really trading lah. So how should you be investing in this ETFs? Is through dollar cost averaging. So if you don't know what is dollar cost averaging, it is not trying to time the market. So because people always try to time the market, they want to buy the lowest price possible, right? But sometimes like it doesn't drop to the lowest price possible, then you don't get to buy it. So you don't do this kind of like bias timing the market. You just put in a sum of money at every certain interval. So most people do it as a monthly thing. You can do it yearly thing, but monthly would be better lah in terms of dollar cost averaging. Okay, so like every 15th of month you put in like $200, that kind of thing. Yep. So some of the cons of ETFs are the trading fees and also the expense ratio. So they need some expense ratio to help you like buy and sell the stocks of whatever thingy they are holding lah in this ETF. Yep. Also there is fluctuation and risk lah. Not say there's no risk. It's diversified risk, but there is still risk. Okay. So also you need some like investment knowledge to do your own due diligence on which ETFs to invest in. Of course, not ETFs are the same. Some ETFs do better than others. Yeah. Okay, so I'll be sharing a bit more about the VOO just now that I mentioned. Vanguard 500. Okay, so if you just look at the graph, right? For Vanguard 500, if you have invested at the start of the year from now, which is in September, you will have been at $300. So invest until now, you will be $400. So basically, you earn a 30% return. Yeah, but actually not every year is 30% return. So if you look at the 5-year average, right? So 5 years ago it's $200, and now it's $400. So yeah, so it's not every year 5%. I mean, not every year for 30% return lah. So you need to see also. So long term, it's about. Let's use the time TV calculator to calculate. So present value is $400, payment 0, future value $400. Okay, period, we compound annually, 5 years. Yeah, so annual rate of the ETF that we just now looked at is about 15% annually. Yep, so this is the type of return you can expect when you invest in ETFs. Okay, so yeah, this is not reflective of all ETFs. I just took a random US ETF that is the most popular to illustrate my point on ETFs. So I'm not saying that all ETFs can generate you 15%. Yeah, different ETFs, depending on what they are tracking, will generate different returns. So basically, you cannot say that one ETF is the same as all other ETFs. Yeah. Okay, so do your own due diligence before you invest in an ETF. So, yep. Okay, now moving on to everyone's favorite topic, Roboadvisors. So now it's the in thing to invest in Roboadvisors. So what are Roboadvisors? So it's a digital advisory investment services driven by algorithm, basically an artificial intelligence that help you do the investment strategy. Yep, so it includes automated maintenance and handling of your personal investment portfolio based on the understanding of your financial goals and risk appetite. Okay, so what they commonly invest in for these robo-advisors, they actually invest in ETFs, okay, unit trusts and mutual funds. So just now I explained what are mutual funds, but yeah. Then also some amount of bonds, so they diversify also, so they have put in some bonds, commodity, stocks and others. Yep. So it's mainly for people who are keen to invest small amounts of money but aren't that interested in knowing the ins and outs of doing it yourself, investing. Okay, so some of the pros and cons that I collated from the websites that I've read is that the pros. Oh yeah, just personally I don't use any robo-advisors, so whatever I see is what's online. Yeah. Okay, so the pros are that it's easy to use. You only need to have a low minimum investment, no lock-in fee or period. So this I put a question mark here because I saw a lot of reviews on whether really there's no lock-in fee or period, because a lot of people are having like difficulties withdrawing their money or putting in their money. So that might I'll still leave it here as a pro. Yeah, technically it's no lock-in fee but it's just slow so yeah. Okay, so diversified portfolio, so you diversify, even diversify in the sense that there's ETFs, there's many investment stuff inside your portfolio Yeah, diversified portfolio. Okay, some cons. I think some pros will be like low fees Yeah, but I didn't add it in because I don't really think it's really as low fees as they said that they have Yeah. Okay, some cons. This artificial intelligence only set up like a few years ago, so relatively untested. So your money when you go inside, right, is sort of like helping the AI learn. So maybe they are making all the mistakes now with your money, so nobody knows. Okay, so the ROI might not be good Yep. So it's also impersonal. A lot of people complain of slow and bad services. Yeah. Then as I mentioned, they say low fees, but a lot of hidden fees like forex fees. Like actually, like ETFs or mutual funds already have fees, right? So they already have fees, so there's another layer of fees also So the kind of hidden fees are not mentioned. Okay. Okay, so a bit more about the robo-advisors out there. So taken this from this SingSaver website. Yeah, so I don't know that I'm pretty sure there are more robo-advisors out there, but these are the more common one, I guess. Yeah, so you can read the pros and cons yourself, because I personally don't do any of this, so I will not advocate whether it's true or not. Yes, and I think more common ones are Stashaway and Syfe and Endawas, but somehow when I try to Google Endawas review, there are not much reviews, so I'll be mainly focusing on Stashaway and Syfe. Yep, let's move on to the review of Stashaway and Syfe. Okay, so first I'll give I don't use all these Stashaway or Syfe, but I have friends who use Stashaway or Syfe, so anyway, I'll just I say first, I only look at the lowest review because everybody always say Robo how good, how good, how good. Nobody tell about Robo how bad, how bad, how bad, right? Okay, so here I tell you how bad, how bad, how bad. Okay, so based on the reviews, this guy wrote like 1 star. This guy called David Ho. Okay, he says shockingly low returns after more than a year. So he put in 20k, right? But the highest peak he see is a 1.5k gain. Actually, 1.5k gain is good. Oh, so he said the robot didn't cash out. So, but he now put in, he also put in more lah, 10k more apparently. Then his return are at negative 500. So he says that he are paying the fees for nothing, waste of time, huge operating costs for money sitting there. So he says he highly does not recommend lah. Sorry to say, but never met anyone who given me a positive feedback. Okay, so he says, another person here, Lee Kai Ling, he says that, I don't know girl or guy, but say that deposits can turn into a nightmare when you miss. So it's some like payment problems like you transfer the money, deposit problems. Yeah, so he sees future deposit for peace of mind. Okay. Another person, worst experience, not only as investment but also in the process. Don't listen to what clients say. So this one is a 3 months ago review so don't say like long time ago they start and then something happened, then they didn't. So until now they haven't organized this so it's just 3 months ago. Okay. Then next guy, Desmond Teo, open account in March. For a period about 3 months, portfolio consistently down. So if you invest in March until now, until 2 months ago, it means you invested until July, so it's about 4 months. 4 months he keep tracking but only positive a few times. And then he opened other accounts with 2 other prominent robo-advisors and their returns to date is higher. Disappointed with statutory performance. So okay, this guy, he's saying he compared with other robo and other robo is better. He never talked about what are the other robo lah. So I don't know. Maybe you can find out from him what are the other robo. Maybe you can invest with. Do the same as him lah. Yeah. Okay, so do not recommend. Stash away. Invested over 8 months. Portfolio barely positive. Requested closure. Still have not received funds. So see that I told you. They say it's easy to withdraw, but is it really easy to withdraw? That's the question. Rude and pushy. Okay, can. Applied for full-time. Okay, never mind. We ignore the full-time job. Too good to be true. What? Taxes of 30%? Where is this coming from? Yeah, the taxes no choice one because it's taxed in US, it's not taxed in Singapore, so different. So this is not a valid thing. Yeah, so this guy invests for 1 year, yet to break even. Okay. Scam, somebody says. Bad experience with payment. Poor ROI. Put fake 5-star review or not I say somebody say poor product, please invest in development. Okay, so I guess all these reviews are coming from because the AI hasn't developed sufficiently for it to work well, so there are a lot of issues with the ROI mainly, and the payment and the withdrawal. Yeah, so basically invest if you still believe that the ROI is good, I guess. Yeah. Okay, then let's move on to Scythe. So for this, right, I have a lot of friends in Scythe, and then I recently heard from them and also read a lot of YouTube reviews on them. So basically, how they calculate their returns, right, it's a bit shady lah. If they give you bonus, right, they will count it as a return also. For example, you invest. They say you invest I'm not sure what's their reward lah, but they say maybe invest $500, they give you $50, that kind, right? So they will count that $50 as your gain. So maybe let's say you actually invest $500, right, but you're losing $40, then they give you the $50, then they'll say it's total 510, right? So 510 is your current portfolio, and then you have gained that $10. But actually that's not true, right? You should be looking at just the portfolio itself. Okay. So also got hidden fees like FX fees and stuff that they don't tell you about, because we mostly invest in like US stocks ma, you know, like exchange rate fluctuation, then they have fees lah. So they don't like explicitly say how much are the fees or that kind of stuff. Yep, so a lot of hidden fees that you don't know about also. Okay, so these are for my feedback from my friends and like what I saw on YouTube, so this is not my point of view. And as I told you, I didn't invest in all these robots. So let's take a look at what other people say. As usual, I have sort by the lowest, so just to show you what are the bad things about it. So these reviews will be more accurate. So this one say like, put in $50, no response, just say receive, wait for 2 weeks. Okay, so customer service sucks. Okay, conclusion. But that's a month ago. Oh, so a month ago they still customer service no good. Don't know why. I thought it's like many long time ago already. Okay, 2020 was one of the best years for investing. Stashaway has had 20% since crash in March. Okay, so as you know, right, the market in 2020 was crash, right? So it crashed, right? And if you invested after the crash, right, there's no way you can be making losses now, right? Because it crashed like 50%, the market around there. So eventually, this person portfolio is still making losses. Same for my friends, they also say their portfolio is making losses. I have no idea why. Yeah, then they will tell you that you actually have some return, but it's actually from the bonus. Trash customer service that cuts you off abruptly. Okay. Yeah, so most people talk about the stock market crash in March, but somehow their portfolio still lost. Don't know why. So it seems like this loss thing is very common with people inside. Actually, their interface is really quite good. I saw my friend use it. It looks very professional, so I'm not sure why there's this review. So, oh, quite sneaky with their risk profiling, not the same as Stashaway. Is it a Stashaway advocate? I'm not sure. Okay. Package and easy, low cost of investing. Okay. So this guy say it applies to all robo-advisors in general. That the return is 2. Okay. Yeah, so the rest are positive reviews. I will not go into it. Okay, let's move on to everyone's least favorite topic, investment linked plans. So, investment linked plan has gotten a bad rap because of its number of fees that it has. So, what is so good about investment linked plan is that it shows you all these fees that are involved. Okay. So if you don't know what's an investment linked plan, it's combining protection and investment. So as a policy holder, you can decide on your asset allocation and what funds that you want to invest in. So you also need some investment knowledge because you need to choose the right funds that you want to invest in. So alternatively, your advisor can advise you on what funds to invest in, but that's their opinion. You better invest in something that you believe in, then you will be willing to hold it for long term. So also need some investment knowledge. Okay, so these investment linked plans are different from endowment plans. So endowment plans are participating policies where the insurer invests the premiums collectively. So how it works is the insurer will manage the fund and then they will charge a certain fee to manage the fund, and then they give you, they don't give you the return also. So like if the fund is like performing at say 4.75%, then they'll give you a certain amount of return. So if the fund is performing lower than that, they will give you a lower return, but definitely will have returns. Okay, so they also like some year good, some year bad, right? So they also smooth out the returns. So that's endowment plan for you. Yeah, investment linked plan is totally non-guaranteed, different from endowment plans which have some amount of guarantees. Okay, so with an investment linked plan, you pay the premiums. The premiums are used to invest into the unit trust. Okay, and then when it's time for the insurance deduct to be deducted, then they will deduct the unit trust units for the insurance. Yep, basically there are two types of investment linked plans, single premium or regular premium. Okay, so what is single premium? Single premium is you invest one whole lump sum and then you just heck care about it. That's the end of story. Yeah, usually these kind of funds are more, this kind of investment linked plans are more flexible in the sense that you can withdraw it anytime, that kind of thing. But if you withdraw like right after you put in the single premium, right, obviously that's not ideal because it's like they just charge you and then you take out immediately, so you definitely take out at a loss. Yeah, but if you leave it for like a few months, if the funds are doing well, you can actually take out at a gain. Yeah. Okay, then moving on to regular premium. So regular premium is like at regular intervals. So usually yearly, monthly, quarterly, biannually. Yeah. This kind of regular premiums. Yeah, so usually you will invest until like certain amount of years, then the insurer will allow you to go on like premium holidays. Yep. Then that's usually also when most of the charges stop lah. Yep. Okay, so some of the charges involved in investment-linked plans are underlying fund charges. So because you are investing in mutual funds and unit trusts, there will be underlying fund charges for the fund managers to manage the fund. Okay. Also, and when you invest, there's sometimes a premium charge. Not all investment-linked plans have this premium charge. So if your investment-linked plan is more like a lot of like insurance related stuff, right? Means like the most common investment link one is only life. Like when you pass away, then it will give you a certain amount of return, as in maybe your premium amount. That's the least amount of like insurance coverage for investment link plan. But some investment link plan have other coverage like critical illness or other things so their premium charge might be more. Yeah, so it's also possible that there's no premium charge at the start, so it depends on whether the investment link plan is front-loaded or back-loaded. Yeah. Okay, so premium charge is like, if say you invest $100, then if the premium charge is 20%, means only 80% will be invested into the mutual fund. Yep. Okay, so next is about this mortality charge. So mortality charge is to charge on the sum at risk. So what is a sum at risk? Sum at risk is when the insurance coverage amount is higher than the policy values. So there will only be mortality charge when the policy value is lower than the sum assured. Yeah, so this is also not all the time you will have this mortality charge. Yeah, so these two are sometimes have, sometimes don't have. Okay, another sometimes have, sometimes don't have one is the bid offer spread. So this is usually when you switch of fund, right? Then because when you buy and sell, even for like stocks or whatever, right, usually you will have to buy at a higher price and then sell at a lower price. So there's a bid offer spread that the insurer or the stock market can earn. But some insurers don't have this bid offer spread, so you need to check your ILP whether it has this bid offer spread. Yeah. Okay, then I think every investment link plan usually have supplementary charges, so it's like sort of like for the insurer to manage the whole thing kind of thing. It also goes in line with administration charges. Yep, these two are like paid to the insurer. Okay, then also for some funds, most investment link plans, there will be a surrender charge. So this is not for all funds, not for all investment link plans because if you invest in the single premium, usually there's no surrender charge. There's only the premium charge at the start, so there's no surrender charge. Yeah, so it's like for a certain amount of period you cannot surrender. If you surrender, then definitely you can surrender and get back some sum of money, but the charge can actually be 100%, means you don't get any sum of money. Yeah, so it depends on your product whether it has any surrender charge. Okay, and lastly there's a premium holiday charge. So this one is usually also not say confirm have one, because premium holiday charge is usually for regular premium investment link plans, not for all investment link plans. So if single premium, there's no premium holiday, you only put in one premium. Yeah. So for regular premium, usually after certain amount of years, right, they will just waive off this premium holiday charge, so you can go on premium holiday, just leave your fund there to grow. Yeah, I wanted to say rot, but yeah, grow. Okay, yes, basically these are the charges of investment link plans. Okay, in case this is more to like educate people on what investment link plans are actually about, because most people really think that it's the worst of the worst lah. Also, I just want to share, if you are investing in, not investing, if you are saving with endowment plan, right? Technically, it is almost the same, just that you have guaranteed and non-guaranteed. So the amount you pay for the guaranteed and non-guaranteed is the difference in the interest rate lah, that you are investing as compared as you are investing in an investment link plan. Yeah, so technically, all these charges, right, also are shown in like endowment plans, right? It's just that, not shown in endowment plans, they are embedded in endowment plans, but you don't know about it. Yeah, so they will just tell you one whole lump sum is a expense, that's all. Yeah. Okay, so basically how investment link plan is with the insurance also, but also have the advisor that helps you. So it's a bit like the Roboadvisor, but have a insurance component, and the advisor also help you advise on what to invest in lah. Yeah. And also this is more personalized compared to Roboadvisors. So I think you pay a bit more for the fee for someone to help you look after the thing. It's also quite understandable sometimes. Yeah, so basically you also need to go and see each insurer which ROI is the best lah. There are some funds that actually outperform the ETFs, and also it really depends whether you want it to be linked to an index or you want it to be actively managed by a professional. So if you want it to be actively managed by a professional, right, and you want to invest in like mutual funds, you can't invest in mutual funds through the stock exchange unless you are someone very rich. Yeah. Then, so what investment link plans can do is give you access to these mutual funds lah. Yeah, so if these mutual funds are actually high ROI, then definitely, even with the fees, it can still be worth it. So, yep, that's all for investment link plans. Okay, so now I've gone through all the 3 investment products, right? Honestly, everything has charges lah. So it doesn't really matter how much are the charges if the product you invest in is good. So if let's say you invest in a robo that is damn good, then every year they're giving you 50% return, then it doesn't matter if the fee is 10%. You don't care, you pay 10%, you get 40%, right? So what is important, most important investment vehicle, I feel, is the rate of return on investment. Yeah. So if the return on investment is 3, don't care about how low the fees or whatever shit are lah, because it doesn't matter, because if you are making losses, then they still deduct the fees, then what's the point, right? Yeah, so conclusion of the day, it doesn't matter what investment vehicle you are using, but make sure that your investment can actually make a return on the investment. Yeah. So also what I advocate, right, is not only look at the return on investment lah, also invest in something that you believe in. So let's say you believe in tech, then invest in tech lah. If you believe tech is the future of the world, why you don't invest in tech? Then also when you invest in tech, and imagine for example you invest in some tech ETF lah, then the tech ETF go down maybe 40%, you will still hold? You still hold? That's the question lah. So if you actually really believe in this tech ETF, you will continue holding what? But if you don't believe, then you exit the position, then you lose 40% already. Yeah, so the conclusion of the day is really invest in something that you believe in, and invest something that gives you a high enough ROI to overshadow the fees charged lah. Basically look at the net return on investment instead of looking at fees wise. Yup, that's the conclusion for tonight. Oh yeah, so I did this video because many people have asked me what's my opinion on Robo. So basically, I don't have any experience with Robo, but I'll tell you that many Robo do not actually generate much ROI. So if you want to invest in Robo, really do your research and find a good Robo that has good ROI. Also, if you have to do your own research to get a good robo, right, then you might as well do some research into stocks and maybe put into ETFs instead. Yeah, just my 2 cents. Also, not say put all your eggs into one basket lah. So basically, if you think that there is good ROI in like investment linked plans, you can invest in investment linked plans as well. So you have like, maybe you have 3 baskets, you want to put some in ETFs, some in Robo, some in investment linked plans, don't need to be all in one lah. Yeah, so you can diversify the diversified funds kind of thing. I don't know whether that works, but if that works for you and you really like to diversify your risk as much as possible, you can invest in all 3. Okay, that's the end of the video. I hope you have learned something from this video, and if you have learned something and you wish to show your support, please like and subscribe. Thank you everyone. Bye bye.